Welcome to the weekly Micron Technology Spotlight podcast for Week 5, 2026. Welcome to the Market Spotlight. This week, we're focused on Micron Technology. The biggest headline: the company is completely sold out of its high-bandwidth memory for all of 2026, a result of an unprecedented surge in demand from the artificial intelligence sector. This news has sent the stock soaring, gaining over 40% since the start of the year alone. With the company making multi-billion-dollar expansion plans to keep up, the big question is this the peak of a supercycle, or just the beginning of a new era for memory chips? Welcome to TickerWatch News from Micron Technology, Week 5, 2026. This week, we'll cover the major developments driving one of the market's top-performing stocks, from its incredible rally to its massive strategic bets on the future of AI. Stock Snapshot. It was another strong week for Micron Technology. The stock began the week trading around $415 and closed out Friday near $441, a gain of over 6%. This performance significantly outpaced the broader S&P 500. Trading has been highly active, with the stock setting a new 52-week high, reflecting intense investor optimism. The gains were fueled by a wave of positive news about supply shortages and a flurry of bullish analyst ratings, which overwhelmed a mixed performance in the wider market. Top news and headlines. The dominant story for Micron this week is the extraordinary demand for its products, which is reshaping the company's strategy. First, the company's high-bandwidth memory, or HBM, is reportedly sold out for the entirety of 2026. HBM is a critical component for AI accelerators, and the soaring demand is tied directly to data center operators expanding their AI capabilities. This isn't unique to Micron. It's an industry-wide trend that some analysts are now calling a supercycle for the memory sector. Both Micron and its key competitors have indicated their HBM products are fully booked. In response, the company is making major strategic moves. The company is sharpening its focus on the most profitable parts of its business by exiting the consumer memory market to prioritize enterprise and AI infrastructure customers. To meet the surging demand, the company is investing heavily in new production capacity. It announced plans for a new $24 billion advanced wafer fabrication facility in Singapore. It also signed a letter of intent to purchase a chip fabrication plant in Taiwan for $1.8 billion. These moves are a part of a larger global strategy that includes a $200 billion investment plan in the United States. This intense demand is translating directly to financial performance. The company's recent earnings report showed sales grew by more than 50% from the year-ago period. The cloud memory division was a standout, with revenue nearly doubling, driven by the AI boom. Looking ahead, the company is guiding for what could be record revenue and cash flow in the coming quarter. Market reaction and investor sentiment. Wall Street has responded to these developments with overwhelming enthusiasm. The sentiment surrounding Micron is decisively bullish, with headlines dominated by terms like supercycle and AI-fueled rally. This week saw a flurry of positive analyst actions. Phillips Securities initiated coverage with a buy rating and a $500 price target. Mizuho, Barclays, Stifel, and TD Cowen all raised their price targets, with some analysts now seeing the stock reaching between $450 and $500. William Blair also started coverage with an outperforming rating. The broad consensus among analysts is that the current AI-driven memory cycle will be stronger and last longer than previous ones. J.P. Morgan went as far as to name Micron one of its top chip picks. On the institutional side, investment management firm Ashwa Capital revealed that Micron is its largest holding, citing the combination of structural demand growth and improving industry discipline. The stock price has moved in lockstep with this bullish narrative, hitting a new 52-week high this week, which confirms that the market is buying into the growth story. Technical and fundamental check-in. From a technical perspective, Micron stock is in a strong uptrend. Having just set a new 52-week high above $440, it has cleared previous resistance levels. The next psychological milestone for traders to watch will be the $450 mark. Fundamentally, the stock's valuation presents a mixed picture. Despite the massive run-up, on a forward earnings basis, Micron trades at a valuation that is below many of its semiconductor peers, suggesting it could still be undervalued. However, other valuation models that focus on future cash flows indicate the current share price may have run ahead of its fundamentals for now. The growth story is clear and is centered on AI demand being a structural shift. The primary risk revolves around the company's high capital spending. New fabrication plants cost tens of billions of dollars. If AI demand were to slow unexpectedly, the industry could find itself in an oversupply situation, a classic risk in the historically cyclical memory market. Also of note, one company executive recently sold over $10 million in shares, though public filings suggest this was a part of a routine pre-planned sale. What to watch next week? Looking ahead, investors will be monitoring several key developments. Micron announced it will be presenting at the Wolfe Research Auto Tech and Semiconductor Conference on February 11th. The market will be listening for any updates on demand, pricing, and the progress of its global expansion projects. Upcoming earnings reports from other tech giants could also provide more context on the health of data center spending. Technically, traders will be watching to see if the stock can hold its new highs above $440 and challenge the $450 level. The bull case for next week would see continued strong demand signals from customers and peers, which could push the stock towards the higher analyst targets near $500. The bear case would involve any hint of a slowdown in AI infrastructure spending or news that competitors are ramping up their own production faster than expected, which could trigger profit-taking after the stock's rapid ascent. The base case sees the stock consolidating its recent gains as the market digests the wave of positive news and awaits the next major catalyst. Thank you for tuning in to TickerWatch. This podcast is for educational purposes only and is not financial advice. All information was sourced from publicly available news reports from the past week. Please be sure to subscribe, leave a review, and share this episode.